Great. Okay, cool. Stephen Bartholomeusz from Business Spectator, what really impressed you about these numbers?
Oh, everything. I think if you look at it, it came in obviously above market expectation, a couple $100 million above. But what's really impressive about it is that everything Sam Walsh said he would do, he's done more. So whether it's costs or reductions in capital expenditure or volume increases, they've outperformed all the guidance they themselves have provided. And by a street, the cost reduction program is they've done more in the first half than they were promising to do for the entire year. And so they're way ahead of where they were tracking. And they're promising more of the same, so that the costs will continue to reduce, capital intensity will continue to decline, and we're seeing in this result that the strategy, and it's not a dissimilar one to one BHP's pursuing, but we're seeing the results are actually starting to flow.
And they're doing all that while still increasing production.
Iron ore is more than 80% of their earnings base. And iron ore prices, of course, have come down quite dramatically, about something like 20%, I think, for Rio, average realised prices. So that could have really hurt them. It effectively took $1.5 billion, $1.4 billion US out of their earnings base. But the combination of the big volume increase, which is continuing out of the Pilbara, and the big cost reduction program meant that more than compensated for the loss of price. So that as a strategy, it's turning out to be a very highly successful one.
And they've actually hit record production in iron ore, so they're really driving more and more ore into the market. I mean, that's going to push prices down further, and what effect will that have on competitors for Rio?
Oh, it's already having a big effect. Walsh referred to it at the media teleconference a little earlier today. It's already driving some domestic Chinese production out of the market because they're obviously high cost and low quality. It's also having a big impact on junior miners in Australia, some of whom are now losing money because not only does it displace the high cost volumes because they can't make money at the sort of price levels we're pushing towards, but they get a big discount because of quality. And some of the ferrous content in some of the junior miners' ores is sort of 58 ferrous, right? So it's much lower than the Rio and BHP ores, and they're getting discounted up to 20% relative to BHP and Rio. Now, Rio is the low cost producer, it's the high quality producer in the market. They have the best margins of any of the iron ore producers. They're in the best position to keep driving the production volume increases and keep driving the less competitive guys out of the market.
Now let's talk about cost reductions for a second. I mean, they cut a lot out of the business, billions of dollars. Is that because it was getting quite flabby in its expansion phase, or is it because they're shelving production of a whole bunch of other units as well?
Look, I think the big story about costs occurred during that sort of the peak of the investment boom in resources, where there was this huge scramble to get resources out of the ground and onto ships, and people were indifferent as to how much it cost them to do so because the prices were so high. You could make money regardless of your costs. And of course, when that music stopped, when the commodity prices started sinking, it was no longer sustainable. And we've seen in coal, for instance, in coal, Rio's coal business is still losing money, although albeit less than it was previously. And despite lots of cost cutting there as well. So what we're seeing, whether it's Rio or BHP or Xstrata or any of the miners, what they're trying to do is to undo all the damage they did during that scramble to get production out during the high inflationary elements of the commodity price boom. Rio's now taken $3.2 billion US out of its cost base, and expects to do another $1 billion next year and another $1 billion the year after. And so they're tracking quite well at getting themselves back to where they started.
But this is a lot of Capex is coming out too. So, I mean, is that in a way sort of choking off their future pipeline, or is that not a problem?
Look, they've gone from having Capex in the high teens down to I think it's about $9 billion now. I think it was only $3.6 billion in the first half, but it'll be a bit higher than that in the second half. And then next year, another $1 billion will come out, and that'll be sort of sustainable level, $8 billion a year. Well, $8 billion a year is not a bad level of Capex to be putting into future projects. And there is a rebalancing here. Because of the wounding that shareholders got as capital was just poured into expansion, shareholders obviously got really frustrated. They weren't seeing too much of that. And so Rio and BHP are both now saying, well, even though prices are lower and profits aren't what they were at the peak, we're going to give you a better share. There's a 15% increase in dividend here, and an expectation that if the results keep flowing the way they're going, that they'll be I think the material increases was the expression used in returns to shareholders going forward. So we'll see real discipline on how much capital continues to be put into the business, but more of the returns given to shareholders directly. And that will, I think, would appease shareholders. They want to see investment in the future, but they also want to get some cash today.
Now, what are they saying about what they think the world economy is going to do, given how linked they are to demand for iron ore in China and developing economies?
There's a sort of a long-term confidence in all the language that Rio uses about China. And China's the one that matters. The rest of it it's immaterial compared to the impact of China. And they're confident that the Chinese will get their affairs in order and will have a stable, growing economy, just not growing as fast as it was at one point. Right? So I don't think there's any sense of a return to a boom anytime in the foreseeable future. But there's just an underlying confidence in the longer-term prospects, both for China and naturally, therefore, for Rio itself.
Stephen Bartholomeusz, thanks very much.
Thanks, Jackson.